Welcome to Trading Lounge and the European indices, and starting with the DAX on the 1 hour chart here. So we have wave 3 here, we have corrective wave 4 over here across the major trading level 13 here, and then we have group 1 to the upside in regards to the trading levels. So group 1 is 1, 2 and 3 here, and we're expecting the market to, in both cases, we'd expect a larger correction here. So once we finish this sequence here, let's just see if this is the top here. Let's see if we get 5 waves down, or if we get 3 waves down, well then we know we're going to be going further to the upside. So let's gather that evidence when we get there, but all in all we can expect a correction there, and our aim really is to trade from the 200 up to the 300 here. The question is all about wave 4 here, and wave 4s can get a little bit complicated when wave 2 is simple, and there's a few different ways of looking at wave 4. The first one in the textbook is looking at wave 3 here in terms of distance, and then looking at wave 4 coming back to the 38.2% retracement level. Okay, so it's possible for the market to pull down all the way down to here. I would imagine it will pull a little way down here, but let's just see how we go with this. Okay, what we can do as a plan, and we'll look at this in a bit more detail, but in a bit of a nutshell here, this is the top here. So if this top is breached here, then we can go along from that point. We can bring it down to the next high here. We could also even bring it down to this high here as well, but let's just leave it a little bit higher here for the time being, and let's go in and have a look at this on the 100 tick chart here. So with the tick chart here, let's just drag this up a little bit. The 38.2% retracement wall is way down here. So it's possible for it to pull down to, down to this level here. Normally what we see is we see a relationship between the distance of wave A here and wave C coming into play. So that would bring us into group 2 here, and that's what I would think there as well here. So in terms of trading and using Elliott wave and the levels, we would first of all put the next entry up here, then we can bring it down to here, then we can bring it down to here, and then we can bring it down to this low here, low here. So we could look for a breach of wave B here. I mean, we need a plan B, not because wave B is there, but we need a plan B. So basically, if the market moves up, then we can take that trade here. But also too, as we looked at 100, 200 and 300 up here, that make group 1 of minor degree. The next degree smaller is sub-level. So from the 200 here, we can look at group 1 as 10, or as 1 and 2 and 3 here as well. So if we get support on 13,230, a nice tested support where it failed here, but it did create the first high above the level. If we get a nice support here, then with a classic trading levels pattern, either 1 or 2, then we can go along at that point. So that would be a point to go along at. But otherwise, what we should expect is we should expect 5 waves from wave B down to wave C here. So I'm going to put that over here, but at the same time, I'm just going to copy that and put that down here. Now, let's just say that the market moves down in this space. We get 5 waves down here. Well, then the next long trade setup, if I could just grab this here, I can't put it over there, so that's a bit useless. So, but look, and I can't even draw on this side, but let's just imagine that we get 5 waves coming down here. All right, so if we do get that, we get a breach below the 13,200 here, and it spends a little bit of time under here, then if the 13,200 becomes the support again, the tested support, well then we can go along from there, but it needs to have that tested support on 13,200 and the first high above the level. Do you know what I mean? And then you can also build in on top of 10, 20 and 30. So this is where you build your trade into here, because we would be looking for this top here to be taken out here, and of course this would be our target up here. So the idea is that if we are correct and then the market comes down below the 13,200 here, then find support on 200, you get a position here, then 100, 200 and 300, build on there, and then the target is up here. You can also add on the midpoint here, 50. There will be a correction here, but it will go from being resistance to support, and when it gets to the support, then you can trade long from that point there, add a position there. You don't add into group 2 here, very rarely, unless you're sort of really in there scalping. Yeah, so that's the strategy. So long above here, but when I say long above here, use a bit of common sense and use the classic trading levels pattern. So you want tested support on top of that 230 there, 13,230 there. Otherwise, we'll be moving down to here. You know, and look, we may even end up moving down here further. But if we're going to be moving down here further, it means that it won't find support here. But this market that moves down here will bounce off this level here. But there's the bounce. So allow the bounce to run out of steam, because it'll come back and retest it, and then there'll be another little bounce. So let it go from that point, and then if it moves down further from there, move that way with it. And the AEX will be much the same as well, with its wave 4 up here as well. So the same thing goes here as well. We've got 550 there. So if you get a nice tested support on the 550, then you can go long from that point. But don't expect the market to go too far here, because let's face it, wave 3's got the extension in it. So wave 1 and wave 5 will be much the same length. If this moves down to the 38.2% retracement level here, well then wave 1 and wave 5 are not going to be the same length, and then what we do in that case there is we take this distance here and we look at the 61.8% in here, and then we would grab that, move that segment there, and so if it came down to 38.2%, that's where we would head up to there. The other way to do this, of course, as well is, just delete these here, is once we take the top here, and then we come down to wherever the 38.2% is, you know, where it comes into this space here, and then we look for the 161 up here. So really, that's what we're looking. So we're looking for, I should just darken this a little bit here, so that can go there. And then what we'd be looking at would be group 1 of 550. So it would be 51, 52, 53, and then 55. So I think that any trade to the upside here would be looking, in all fairness, and having a conservative target, would be 553. So that would be the little run up there at that point. Moving across the channel to the FTSE here, and the FTSE is basically either got a completely different wave count or it's lagging. I put it down to lagging, and I think that it can also come down to its 61.8% mark here. It may not, but at the same time, if wave B gets taken out here, then you need to go long from that point. So it's either going to have 5 waves down here and then move up into this space and so on up this way here. So the good news here, 7,500, we're looking for a pattern here. So this is a bit like the classic trading levels pattern as well. The arrival, the reaction, the first high above the level, then the A, the B and the C correction, and then moving up from that point. So allow it to just do its thing here. But if it's going to run away, make sure you got your order just 1 point above wave B here to take that long trade to the upside. Otherwise, allow it to come down here, spend some time. But as soon as it finds support back on 7.5 again, then you need to be long there. And then you would build in through 10, 20 and 30. Wait for 30. If 30 gets support, then you know that the market has separated the pull of the magnet of 7,500, the number 5, then that number 3 basically severs number 5's strength, and it can move up from that point. It will look at this number 5 up here in this case of that sub-degree level, and should be on our way at that point. Alrighty, thanks for tuning in. Cheers.